Okay, so I'm gonna assume that we're recording for now, and yeah, so the analysis continues for US 100 and NQ mini futures. So right now, what I've been eyeing here is the discount wick that has been here graded on purple. That represents the weekly discount wick, and then the black, what you may call it, the black grade here represents the daily grade wick. So again, we're still stuck in this consolidation range. So it's been pretty challenging for me to get something that's stable at this time. First would have been first of all, would have I've been feeling very bearish on the US 100 simply because we've been stuck in here in this consolidation. We have a higher time frame market maker sell model here in place. It's a little bit confusing at this time. I mean, we have multiple market structure shifts. I mean, this break of low could have qualified. This break of low could have qualified. This break of low could have qualified, but some days we just kept expanding up higher. So okay, so maybe we're aiming for this buy side liquidity, possibly up here. We didn't. We reacted off a weekly grade here, reaching to the upper quadrant, closed right below it, and then immediately sold. No problem. So we're still dealing from this low to this high as a dealing range. So we still have some sell steps here that we can use to expand to go up higher. Or if we're bearish, we can form a market maker sell model from this low, maybe to this high, and then continue selling. Moving forward, you'll see the daily grade up here and then the weekly time frame grade right here. Now both changed in black. So this morning during London kill zone, we have these bodies reacting up here, and look at that close up that reacting off above the what you may call it, the premium side of this gap. Getting down closer, trying to add more of a time frame or more of a time element into this. We have a swing low here. This is the last swing low before the market structure shift, and then the market maker, not the market maker, the market structure shift occurred from this high to this low, which broke down this old low, acquired some buy stops up here, so we have another mini dealing range. So I thought that this was going to be the market maker sell model that's going to take us from this low to this high down to these sell stops, possibly even here and maybe even down lower. You see that we have Tuesdays, November 25th, um, New York AM sell side liquidity that has been tapped now officially. So price went all the way down there today. It's very interesting. Now we're going to zoom in into this price action and see how more specific we can get into. So here's that market structure. Excuse me. Yeah, market structure shift, low to high, buy stops, swing low, broke down through it, traded down below it. So that's our market structure shift. Price retraced back up to OTE. So now here's where I anticipate price to form another mini market maker sell model, a fractal, from this low to this high down to this sell stops, and possibly continue the agenda. Right? So we have OTE plus seek market maker sell model fractal here, is what I'm telling myself. And why up here, if you align it, we have New York's lunch first presented fair value gap and New York 7 a.m. Market maker first presented fair value gap, and we even have London's first presented fair value gap down here. Tap yesterday to New York lunch SIBI, and today London first presented fair value. So we have that here, and it's wicking. So when we're told that when it's wicking and not necessarily closing above the concept with encouragement, this is a sign of weakness. Okay, moving forward, now we're going to be analyzing the fractal. So we're going to go deeper into this area and see how price behaved here. Okay, so now we're retracing back up here. It's already 6 a.m., 7 a.m. here, beginning of the 7 a.m. hour. We see that price once again has a market maker sell model here. Old high taken on the fractal, so it's up here. Okay, and then we have the seek one plus attack on premium. I think this is a typo here, but what I meant to say was that it seeked an imbalance up above here before it displays down lower. So we have our dealing range from high to low, and then we have the wick. Okay, New York lunch first presented fair value gap react up here, and then where's the entry? The breaker, right? So this sell side delivery, extend this forward. You'll see that it barely touched the medium threshold of that breaker block, plus the first presented 7 a.m. entry. So we have here our first presented fair value gap, high to low for the 7 a.m. hour. Price we trade up, and we treated it as a model 2022 mechanic. So after we had that displacement, right, and formed our dealing range, we also had our first percentage fair value gap, could enter inside here, and then slowly as the day progressed, little by little, it started declining down further. Then we had the CME open. I'm sorry, not the CME. Yeah, CME open, along with the non-farm employment change number coming out. Tap the fractal of the market maker sell model, went down lower, and then as 9:30 hit, we just kept down going lower. So again, we're gonna zoom out again. So we were just analyzing this area right here. You'll see that it went all the way down lower. How low? Until Tuesday's November 25th, New York's AM sell side liquidity. So we have that down here listed. So again, it's another example of a model 2022 entry. When it reacts up in that manner, this could be interpreted as a low risk sell entry, right? The first swing high after the displacement down lower. That is the uh, that is the low risk sell. From this high to this low, you have OTE. This is our first stage redistribution. Okay, then we have our second stage, and then it was met with high resistance liquidity, but it still ended up tapping that sell side delivery. And yeah, so that's all I have for you today. And let me see, how do I want to finish this? Yeah, so that's what we have here for today. The only thing that was challenging about this trade was that I wasn't finding any quadrant level to align that swing high into, because that would have been giving me even more confidence that this would have been a very valid trade. All in all, I think what we had here in information was still enough. It did net about more than 100 handles down lower. I was putting this position indicator here. So we would have been risking about 40 handles to make around 120, maybe even more, if you left the partial on. So yeah, the power of this material that we've been learning lately just comes to show that again, it hit and it behaved the way it needed to. And yeah, so you just keep studying. All right, I'll catch you in the next one.